At 11. Inflation and fears of an economic slowdown persisting. That's impacting the action on Wall Street. The S&P has 6 straight weeks of declines, 7 weeks in a row for the Dow. As of Friday, the S&P 500 had fallen 16% in 2022. The Dow Industrial Average down 11%. The NASDAQ has lost 25% of its value in this year. So joining us to help us make sense of all of this is Dave Elizondo, a certified financial planner with True Financial Partners in Bettendorf. Good morning to you, Dave.
Good morning, Denise.
Thanks so much for being here. I feel like the word volatility and money makes people very nervous, especially when we keep saying down, down, it's down again. What say you?
Well, it's been a rough year so far for all of the stock markets. And there's 3 reasons why the markets have been so jittery, if you will. The first one is the supply chain issue, which has been going on for probably a year and a half. Stores just cannot get supplies onto their shelves, just like you had mentioned about the baby formula. That's problem number 1. Problem number 2 is the Federal Reserve has started to raise interest rates over the last few months and are going to continue probably for the rest of this year. And what that means is money is more expensive. If you go to buy a new car, your car payment just went up. If you go to buy a new house, your mortgage payment is going up. So money is more expensive. And then the third reason is the war in Ukraine. Ever since the war started, gas prices have just gone through the roof. I mean, we're paying $4 up to $5 a gallon for gas now. So that's affecting everything in the store shelves. It takes gas and fuel to get those products to the market. So all 3 of those things mean that people are going to spend less money. They're not going to be buying as many products. And as a result, that companies are not going to make money. And that spooks the market, because when companies don't make money, then their stock prices go down.
So in theory, though, should raising interest rates have impacted the market in a positive way to try to fight that inflation, or not so quickly?
Well, when it comes to inflation, there's a sweet spot where the economy where interest rates would be and the economy would hum along really at an optimum level. But what's happened is the Fed, we think that the Fed started raising interest rates too late. So now they're raising interest rates is like tapping on the brakes if you're going too fast. Well, now by waiting too long, now they're having to almost slam on the brakes, and it's causing all of this disruption in our economy, which greatly affects the stock market. Higher interest rates and inflation really do spook the stock markets.
Yeah, the sweet spot, looking for that timing. So it sounds like this might have been a little bit too late in this case. We're going to have you back again, Dave, because there's a lot that people want to know about how to feel secure in their money. So thanks so much for being here this morning.
Thank you, Denise, for having me.